One of the most effective strategies for tax deferral is rolling your ESOP distribution into a traditional IRA account or another employee-sponsored 401k. I'm Peter Newman, the founder and president of Peak Wealth Planning. We specialize in managing the retirement income portfolios of ESOP participants that are close to diversification age and retirement. This rollover, if completed within 60 days of receipt, or your company pays your ESOP distribution directly to a retirement plan, allows your assets to continue growing tax deferred and avoids immediate income tax on the distribution. Once your ESOP distribution is rolled over to an IRA, you can then manage withdrawals strategically, spreading income over many years to control your tax brackets and invest with the goal to meet your cash flow needs. Another valuable strategy is considering installment withdrawals from your ESOP after it's rolled into an IRA. Spreading distributions over several years seeks to generate a steady income stream that can supplement Social Security, your spouse's 401k, annuity, or pension benefits. To keep your income low and provide opportunity for Roth conversions, you withdraw from taxable accounts first, allowing your tax-deferred accounts, including rollover ESOPs, to continue compounding and work with your CPA and your financial advisor to see if Roth conversions make sense while your income is low. Once you reach Medicare age 65, you'll coordinate withdrawals carefully to avoid increases in Medicare premiums due to IRMA surcharges from your higher income. Starting at age 73, when required minimum distributions from qualified plans kick in, you'll coordinate withdrawals to ensure compliance with RMD rules and avoid penalties while not generating excess taxable income. At age 73, you might draw from your taxable accounts in your Roth IRA and only draw what you need from IRA accounts that are tax deferred to meet those RMDs. Successfully integrating your ESOP into a comprehensive retirement strategy requires careful attention to multiple areas. Understanding the mechanics, timing, and diversification rules ensures you can access your benefits when needed while taking advantage of strategic diversification opportunities. The tax considerations for ESOP distributions can significantly impact your retirement income, making it essential to understand your rollover options and required minimum distribution planning. Transforming your concentrated ESOP wealth into the goal of reliable retirement income involves navigating complex rules, timing decisions, and tax implications. If you're approaching ESOP diversification eligibility or planning your retirement strategy, it's worth considering professional guidance to develop a personalized roadmap that aligns your ESOP benefits with your retirement goals. Subscribe to this channel to stay up to date on everything you need to know about ESOPs. Schedule a free consultation with us to discuss your specific situation.